Pavel, so why is SoftBank getting into asset management?
I think a lot of investors are probably asking themselves the same question. The truth is the idea has been kicking around the Vision Fund top brass circles for quite a while, which is not surprising considering how many of those people come from a finance background in Deutsche Bank, Citigroup, and Goldman Sachs. Now, they've had some success with the NVIDIA derivatives, and the Wirecard deal was supposed to be one of the first investments in this new vein of investments, which unfortunately has backfired. But it seemed to have not deterred SoftBank at all. In fact, actually, I had a person who was an investor at Vision Fund has moved on to become an executive vice president at SoftBank, directly advising Son on investments, who's probably going to be closely involved in this asset management enterprise, which we are hearing is probably going to be tens of billions of dollars of technology shares in companies like Apple, Amazon, and Facebook, and as well as derivatives. I guess the main question is why now, given the valuations of tech stocks near the record and concerns of the bubble, and not to mention the fact that Vision Fund is actually not out of the woods yet itself.
Right. So where are we at with the Vision Fund, right? And is sort of Vision Fund 2 still hanging in there with a possibility of life?
Well, at least the Vision Fund has turned profitable in the last quarter. It posted about $2.6 billion in gains. Now, only $1 billion of that came from increased valuations of private companies, about 1.4 from publicly listed companies like Uber. In fact, Uber is a good example. SoftBank booked about $7 on gains in Uber shares, but the stock is actually trading around $33, which is pretty much break even for SoftBank. So these gains and losses actually don't reflect the final outcome for the company. And Son himself has warned that this is not going to be all profits going forward, that there still may be some rough times ahead for the Vision Fund.
Right. So, Masa had said he's in defensive mode. Defensive means cash. So how's he going to pay for all of this?
And that's probably a bit of good news for SoftBank shareholders. For the longest time, Son refused to sell some of his most successful investments, including Alibaba and, SoftBank Corp, which is the domestic telecom unit. But that really has changed drastically this year. He's already sold off about $40 billion worth of Alibaba, T-Mobile, and SoftBank Corp stock, and that's out of the $42 billion target. And yesterday he said that they might actually go beyond that. And clearly one additional thing that they're considering is selling a stake or perhaps an entirety of the ARM chip design unit that they own completely. They paid $32 billion. It's not clear if they can get much more for it, but it's definitely showing a whole new approach to asset management by Son, a bigger willingness to spend and sell, but also concerns around willingness to invest in things that are more risky and less stable.